Thanks so much for staying on with us right here on Hot Stocks. Markets are still looking weak and a couple of individual names certainly reacting to their numbers. So you have Nifty, of course, at a level of 75, but let's focus in on a technocraft industries as well. It's a diversified player and the stock currently has taken quite a knock. I think it's currently down by about 3% odd. They came out with their earnings last evening and a bit disappointing, I would say. Their sales number showed a growth of about 11%, so came in at 161 crores, but we saw pressure build up on the margin front for the company. It was just around 20.5% versus 24% almost that they'd managed for the same quarter last year. Let's get on board the management as well to get you more perspective on what was the reason behind the earnings performance this time round. We've got Mr. Saraf, who's the managing director of the company, joining in first up on the show. Thanks so much, Mr. Saraf, for being with us. I was talking about the numbers. So despite the fact that the sales have shown about a 11% growth, the bottom line has shown quite a bit of a drop, down by 33% on the profit front. Margins as well crunched. What would you attribute this sort of performance to?
Well, first let me tell you, we are a 100% manufacturing exporting company. So comparing results on quarter to quarter basis is not really very fair. Secondly, if you analyze what has really happened, the drum closure business, our bottom line has been steady. Last time it was, last quarter it was 29 crore, this time it is 28 crores, is more or less stable. The other income compared to last quarter have fallen because last quarter we had some sale of assets, we had some sale of shares and investments. We had this time we have some loss in, last time we had some profit in commodity trading. So all these three different factors gave us about 7.5 crores extra in other income last time. Next is foreign currency gains. Last year, if you see, the rupee went up from 53 as on 1st April 2013 to 30th April 2013, it went up to 58, 59. So there was a significant appreciation in rupee, and that is when after 3 months is a period when we start getting our realization. So there was a forex gain of 6.4 crores as against 1.3 crore this time. Scaffolding has shown a spectacular improvement. The sales have gone up from 36 crore to 65 crores. The fall which you are seeing in the bottom line, the profits, is only because of the yarn division. In this quarter, yarn division has done extremely bad compared to last quarter, and this is only because of the Chinese stop buying and fall in international market, increase in cotton prices and so on. Yarn is a cyclic business. We hope that after the new cotton season starts, the yarn mill also should pick up. Then if you see the annual performance,
Mr. Saraf, please, Mr. Saraf, please excuse me for coming in here. I appreciate you giving me the details, but since you mentioned let's not look at it on a quarterly basis but on an annual basis, so let me ask this to you. This quarter is a bad quarter. What about the year as a whole?
Yeah, so I was coming to that.
Sure.
That's exactly what I was saying, that if you see, last year we did a PBT of 120 crores. This year first quarter has done 30 crores. So this means if by a simple multiple of 4, it would be 120. But generally it is seen that first quarter is generally weak, except for the last year's first quarter. Normally the first quarter is weak and the last quarter is the strongest. So if we consider that yarn mill would show improvement in at least next half of the year, which is very well expected, the scaffolding will continue to improve because of the improvement in construction business in US and Europe. We feel that we should be able to do better than what we have done last year.
EPS of 50 rupees, you think possible?
Yeah, maybe 10 to 15%. Now we are also seeing an improvement in the rupee. The rupee, which was getting stronger all the time, is now reversing its trend and it's come to almost 61 plus now. So if these positives keep going on, then we should do at least 10-15% over last year.
So Saraf, quickly before I let you go, I just wanted to get in a word if you are considering any demerger of the garments in the yarns division at all. Is that a possibility?
Well, it is a possibility, I would say, but I am not committing anything at the moment. We have to study and we have to see the pros and cons of it, because garment unit at times have helped us. The garment means, I mean the textile division. Garment standalone is not really a division, it's a textile division which consists of yarn mill, garmenting and power plant as well. So at times it has helped us. So we have to see, if we demerge, there is a expense involved, and then what is the benefit you would get out of demerging. Analysts and others, market players, keep telling us that the market cap will go up and market cap should go up. But on the other hand, we have to see whether we could like to at the moment maximize the market cap as it is and then do the demerger, which may give us a better result. So we are evaluating it, we are studying it with various investment bankers, various market analysts and so on.
Okay, we wish you all the best for that study as well as for the year ahead as well, Mr. Saraf, and we do indeed hope that 15-20% is the least that you can do this year. Thank you so much for taking the time out and joining us in our studios.
Thank you very much.
Let's technograph from one company to another, and Vardhman Textiles, it's enjoyed heady days, but I think this quarter the numbers haven't been the best and the stock is duly reacting. Such